Hello, everyone, and welcome to the Week in Review. Normally I say what a week it's been, and I guess that's true this week, although we have been observing that things seem to start out pretty slow this week, and then a couple of more interesting things happen as the week went along. We're also going to reflect a little bit on some of the market news that's dominated the news cycle this week, as we always do, as well as discussing some late-breaking stories that came through last night. So why don't we get started with that? Story of the week is likely you'll have to forgive me, if it was a confirmed hack or a suspected hack at this point, of BNB chain last night, in which something along the lines of 530-something million dollars were compromised. I know, Christian, you did sort of an unpacking of this morning that sort of explains it all. But Tom actually broke the story. So, Tom, tell us what happened last night as it broke, and then Christian, if you could elaborate on what it all means. We'll try this format for a bit, I think, and see how it goes. Tom, what was the story as it broke?
As it broke, it was a mess. Nobody really knew what was going on. Basically, this one BNB chain address started having crazy activity, which basically it started it had. I'm not sure how much it had at the beginning, but when I got to it, it was worth something along the lines of $536 million. Essentially, as it was going on, we could see that the wallet was having a lot of erratic on-chain activity. It was swapping a lot of tokens. It was sending tokens to different ecosystems. It was borrowing pretty significant amounts of stable coins from various lending protocols in different ecosystems. So all this erratic behavior made people suspect that BNB whale had been hacked, which would be pretty big news, because if this were a private person who saw this funds exploited, this would have probably have been the one of the biggest personal I don't know if personal is the right individual. I don't know what the right nomenclature is, but one of the biggest hacks ever targeted at a individual user, not just in crypto history, but just ever. So Binance chain quickly, I think within the hour, halted all operations and shut down the chain. So a lot of the money was frozen. Tether also froze some of the money that the exploiter had borrowed against some of his collateral. So this was about this was more or less the situation as I knew it. When I was writing about it. Further along, it turned out that this was not individual person using this wallet. This was one of the bridges used by Binance for its entire ecosystem. And this is probably where Christian is better placed to talk about the subject.
Awesome. Thanks, Tom. Yeah, that was sort of the state of affairs when I left it last night. It was still pretty much chaos. Christian, you did a post-mortem AM London time and very early AM US time. What are some of the finer details? Can you explain what happened?
Sure. So this was a major hack. With the amount taken, I guess you could say that this is one of the biggest in crypto history, although the numbers are slightly different depending on who you ask, because the hacker didn't get away with all the funds and will likely lose the majority of it, because it looks like there's a good chance it will get frozen on Binance Smart Chain. So the story starts with an attacker basically manipulating BSC Token Hub, which is a bridge connecting BNB chain and I believe it's the other Binance Run chain, and they basically tricked this bridge into sending them 2 million BNB. So that's at last night's valuation about $566 million. And yeah, based on, I'm going off what Sam ZC's son has written, a well-known researcher and on-chain sleuth. Based on what they've said about this, the attack was pretty sophisticated, and it was like a multi-step process. And yeah, they basically exploited a bug in the code. And yeah, when this happened, there were obviously a lot of kind of people in crypto, as there are a lot of people who follow on-chain stuff quite closely, and they're like, oh wait, hang on, there's like someone moving around serious amounts of money here. And yeah, what's interesting is the way they sort of move the funds. So they basically deployed a lot of the BNB that was taking into Venus protocol, which is like a lending platform on BNB chain. And then from that, they got about $150 million worth of stable coins. Did various transactions, like I think some went into Curve, exchanged some for ETH, moved stuff across like the other prominent EVM chains, so like ETH, some of the layer 2s, Phantom as well. And they basically have the BNB is still kind of like sitting on BNB chain, but there's all this other money that's like borrowed and moved on to like Ethereum and elsewhere. The biggest holding other than BNB is ETH. It's like 32 million there, and some of it's been frozen by like USDT. Tether froze some of that, and now there's a question of what will happen to like the money that's on BNB chain. So in response to the incident, I'm not going to say Binance, but the BNB chain team, closely related to Binance, opted to halt the network, and it was down for like several hours, as Tom mentioned, and in a statement they put out on this, they said that it's going to be on like on-chain governance and a community vote of whether the funds will be frozen. So they restarted the chain this morning with the wallet blacklisted, I believe, and they're weighing whether all this BNB will be like frozen as well. Now, there are lots of I guess takeaways from this. One of the obvious things is this kind of question of like immutability of blockchains. There's stuff like this where like networks go down or a pause is never been popular, going back to the early Ethereum days when they opted to rewind the chain following the DAO hack, and obviously had kind of similar with Solana, which people have drawn comparisons to. Some people have kind of saw a few memes about of like, when you do the caching for a transaction and you have to select whether select all the birds in the photo, and people have been tweeting memes of like CZ with like 10 photos of him to say that the network is basically controlled by him. Maybe that's a bit unfair, but it does only have, I think, as 44 validators and only 26 are active. So when you compare it to like Bitcoin's 10,000 plus or Ethereum's 8,000-ish, it's it's obviously a very different beast, I guess. And the other question as well is like yeah, just like, firstly, what was this hacker up to, and like, was there another motive beyond this? Because if they really wanted to get rid of these funds, I mean, it is harder when you happen to have 500 million rather than like 100,000. But yeah, they probably could have made more if they wanted to. Even circumventing the tornado ban. It's like they don't appear to have used tornado really, and the bulk of the funds is just this BNB that's like sitting on BNB chain that's probably going to be frozen now. So yeah, wonder what will happen. And also, 566 million, big number. Kind of reminds me of Terra, 40 billion going down. When that happened, all these like regulators watching stuff, commenting on it, SEC investigating, Korean prosecutors, all these things. This is kind of similar, right? So we'll probably see authorities getting involved, even if it takes several years. And if it wasn't me, but if I was the hacker, I'd probably be relatively nervous right now. I mean, they used a bunch of like centralized stable coins as well that wouldn't be surprised if they're frozen. So yeah, I guess there's going to be some kind of repercussion, and this won't be the last we hear of it. I don't think. I think that covers everything.
Cool. Thanks, Christian, for the the rundown. To start the discussion, I'd like to turn to Nivesh for his sort of, post-mortem analysis of this incident on the scale of seriousness, where you think this falls, what are some broader implications, both technical and sort of, I don't know, maybe political or social. But yeah, just Nivesh, what's your initial response to this when you saw it? What did you think?
Mm-hmm. Thanks, Jacob. I wasn't too surprised when I saw it, because it was another bridge, and it's this year it's been all about bridges. I think we have seen less of the DeFi protocols getting hacked in isolation than these cross-chain solutions. So yeah, I wasn't surprised at all, and we haven't reached that stage yet when we have like a secure cross-chain way of transferring things. I mean, Cosmos's IBC interchain, like blockchain communication protocol, it's getting there. We have Celestia working in the background, then layer 0 and stuff, but yeah, it's not here yet, and as long as it doesn't come, then this might continue. So putting your liquidity to something like on a bridge, or even trading stuff, and holding a lot of coins in your hot wallet might be risky, and it has been proved time and time again. And I think we are also if we are talking about security, then something interesting that happened was the leaks from the Celsius. I'm sure we're going to talk about that. So yeah,
yes, we are.
So obviously, if you were a customer, then probably your wallet is exposed, and if you were also using Ledger, then it's a previous thing, but maybe your private key is exposed as well. Then all the reasons to stay careful. And coming back to the Binance situation, one interesting thing that we saw was they were immediately able to stop whatever was happening, and it was because of their centralized nature. Had it been Ethereum, then the hacker would be at a certain advantage, because it's okay if he used USDC or USDT, something which can be blocked. Then it might have worked for the regulators and Binance. But yeah, if he chose like a decentralized currency like Bitcoin or Ethereum and just parked it somewhere, then even then, like as Christian mentioned, there would be a risk that he'd be caught, because we have seen people getting uh, like tracked easily before. So, but yeah, he would be at an advantage, and maybe he would get some kind of, I would say, white hack reward or something. But this looks bad, and I think definitely Binance is going to go after him. Or and even if they don't, not much has been lost. So yeah, it's like your funds are safer, and the shitcoin casino that Binance chain has been continues to go on.
Thanks, Navesh. Yeah, I guess if anything, my gut feeling response to what you're saying is that this does feel like kind of an argument for Ethereum in a lot of ways. If you're going to um, both to keep your money safe from hacks, and also there are advantages to Ethereum if you're going to try to hack somebody. Although it ultimately, it gets extremely difficult to get away with. Yeah, Christian.
Yeah, I was just gonna say on Nivesh's point about bridges. Yeah, very important. And yeah, I actually read a report that service back in August from Chainalysis, pretty well-known blockchain analytics firm, and yeah, they attribute basically I think it's around 70% of 69% of like hacks as bridge incidents, and the total takings are around $2 billion. So there have been some pretty major ones, like the Ronin incident, was 552 million. That was a bridge, and also the wormhole one that happened at a similar time, like earlier this year. That was close to 300 million. But yeah, it happens like time and time again, and yeah, maybe it's actually like a relatively bullish for projects like Atom that are kind of Cosmos aiming for like this cross chain thing with without sort of dependence on bridges, because it's clear that tech isn't there yet.
Yeah, thanks, Christian. Yeah, it is. It's. I mean, we've been covering this long enough to know that whenever one of these really big hacks happen, it's more often than not, it's a bridge that's been hacked. As far as this one compares to other, or stacks up against other major hacks in the space, I guess I'd like to ask Tim's perspective as well. You knew I would get to you, Tim. Yeah, you've been covering these stories as well for a long time now. I'd like to get your feeling on where this one, the impact of this one compared to others. Is it just, do we chalk it up to just another bridge hack that demonstrates that? And that's another interesting question that I think we can talk about, is if bridges are this vulnerable, do we see this, do we see people just abandoning them in the long term? So Tim, you're up. What are your reflections on this one?
Well, I mean, the fact that they froze the chain pretty early on, has saved the majority of what was stolen directly out of the bridge. The guy or whoever it was who hacked, got like 560 million odd, but they've only managed to get about 110 million of that off chain. So if you compare that to like the wormhole hack earlier this year, it's currently looking less impactful than that. Binance is an incredibly big company, and they'd like to pretend BNB chain is separate, but they're very closely linked. I'm sure that, like how was it Jump Crypto stepped in to bail out the wormhole bridge, there'll probably be something similar happening here if they're unable to recover the funds. On that note, like, it's very the behavior of the hack was very strange, I thought. And a few people have also noted this as well. So if you remember a few weeks back, you might have heard about the Wintermute wallet being hacked. The private key was compromised through that custom wallet naming software. And yeah, whoever did that, it was a very clean execution. It's just instantly went in, got everything, convert it, send it into Curve Tripool, where it can't be frozen, right? Most centralized stablecoin providers, all of them, they have these freeze functions in their contract so that they can, in the case of something like this. But this guy, yeah, like he had bunch of USDT got frozen. Obviously, Binance froze, but I don't really think they reacted that quickly. The hacker had plenty of time to move around funds and get stuff off chain, but they chose to do it in a really strange way. They deposit stuff into Vesta Finance, like Christian said. They could have just converted the BNB straight to ETH and then bridged it over to Ethereum, but they for some reason chose not to. Very strange. It kind of put into question the motives or the kind of person behind this, because the hack itself was incredibly technical. You'd have to have extremely in-depth knowledge of coding solidity and everything to figure out how to exploit this bridge. But then when it comes to laundering the money, the person totally dropped the ball, so to speak, which I guess is great for Binance because and BNB chain and whoever's money it is. I'm not exactly sure if it's liquidity providers or belonging to BNB chain itself or whoever. But yeah, I guess those are my thoughts. Not as bad as previous hacks we've seen. Probably won't have that much of an impact in sort of outside of crypto. I mean, the first time we saw a hack get attention, it was kind of like the Ronin hack, where you had the feds and American regulators come in and they helped uncover that Lazarus Group, the North Korean crime syndicate, was behind it. Maybe something will happen for this one. I don't know, but yeah, it's only 100 million. It sounds strange to say that, but yeah, it's also, I think the fact that it's a volatile token like BNB makes a difference as well. I think Terra got a lot of interest because it claimed to be a stable coin pegged to the dollar, and that really sent off alarm bells ringing with people. It really resonated, but this, people will probably just brush it off as, oh, it's just another one of those stupid volatile cryptos getting stolen or something like that. So I doubt there'll be much of a regulatory effect. I don't think it'll resonate that much, but I could be wrong.
Awesome, thanks, Tim. Before we move on to another topic, I just want to take one moment to take us into the realm of pure speculation. Does anybody have any theory as to why someone would move this money so erratically? Can anybody? Because I've been trying to think of a rational reason why you would do that, and I'm coming up at a loss. And does anybody got any theories?
I'll throw my hand to the ring just quickly. My pet theory is that there's kind of two types of hackers. There's people that just are very smart and they like to break things. And then there's people who are deliberately out to steal money. In the case of the Wintermute hack, which I mentioned, I think that person was deliberately out to steal money. But for this hack, and I remember there was the Poly Network hack back last year in August, which the hacker eventually returned the funds. I think these are just really smart people with too much time on their hands, and they just like to see if they can break stuff. And then when they do, they're like, oh, what do I do now? I've got all of this money. I need to do something with it. And then they behave erratically. I guess that's my theory.
Okay, cool. So the dog chasing its tail theory, I guess, or maybe I don't know. It's got some weird Joker vibes, just wanting to screw with things for the hell of it. Yeah, Christian.
Yeah, I was just gonna say the same as Tim. When the Poly Network one happened, the guy afterwards, very young guy, did an AMA and was saying oh yeah, I just did it for fun. And given the kind of nature of this, and that there is still hundreds of millions sitting there that's probably going to go untouched. Yeah, it kind of has a similar vibe, I think. So, yeah, maybe that's an explanation.
Cool. All right. Well, yeah, big hack definitely got our attention. We'll see how impactful it ends up being in the long run. But it's time to move on to the next subject, as Navesh alluded to earlier. Last night there was, yesterday, our old friend Celsius made some news. Twice. The early news, which I'm sure everyone has heard by now, is the revelation that Mashinsky and a few others pulled at least 10, maybe $17 million out of out of the company before in May. So that's about a month before Celsius paused withdrawals, and 2 months before they would file for bankruptcy. Just for added context, this would have been around the same time that the Terra ecosystem was falling apart, and there was real panic in those days in May. So I don't know if anybody was particularly surprised by this, but it certainly, I guess, not a great look. It paled in comparison to how angry people were with the second Celsius story of the day, and that was the fact that I guess it would have been actually Wednesday that the filing was introduced to the court, but the public record of this. Okay, so backing up, Celsius is in the middle of its bankruptcy proceedings. It has to turn over all this information to the court in various filings. Wednesday, it introduced a filing that subsequently was made public yesterday, late in the day, as a lot of these sort of, corporate disastrous corporate stories do, and I guess in an effort to maybe fly under the media radar a tiny bit. Anyway, this court filing was 14,500 pages long, and it contained tens of thousands. I'm not sure if it was a complete customer history, but it was an extended customer history of Celsius customers, including names, account balances, transaction histories, and some other sort of doxing information. Wallet addresses were redacted from the document, which is notable, but it does raise the question of why was not other information redacted. I looked a little bit into this a week before it happened. I did find a lawyer's blog. I'll try to find it and share it in general or in a discussion. Basically, as part of the bankruptcy proceedings, Celsius was more or less required to report the names of all of its quote-unquote creditors. And that goes in a bankruptcy filing, which are all matters of public record. And it, if we had been paying attention, we would have known last week that Celsius was about to drop this document into the public record containing all these names and account balances and transaction histories and so on. So, people were extremely angry about this, and I guess they still are. But there it is. Full disclosure, I was a Celsius customer. I looked for my name. There it was. I can, I guess, personally speak to its authenticity. What's your response to this, you guys? Like, how outraged are you, or is this just the kind of thing that you're like, oh, well, that's just the way it goes? Or do we really? I mean, considering that bankruptcy proceedings do have certain rules that I really would need to brush up on. To what extent do we have the right to be angry about this? I guess. Yeah, Tom.
I mean, I get the anger, but I kind of feel like as soon as you give your information to an exchange or a lending platform or anything like that, it may not be up to the lending platform whether, or to the exchange, whether like your information is given. So like later on. So I don't know much about bankruptcies. I don't know if it's the same thing for like, if like, I don't know, banks have to do the same thing when they go bankrupt, or other companies have to do the same thing or something like that. They have to depend on that. But when it comes to crypto, like I really very much understand people being like pissed off. I would not want to be doxxed, but that's also the reason why I'm quite careful about like how much information I give and everything like that. Like when I use like a KYC like a service. So I get it, but at the same time, it's not even like if Celsius had been like hacked and all this information had gone out, that's one thing. But like they had to give it over to like the court. So like no, like it's a nobody's fault kind of thing, as far as I see it, from my very limited knowledge of the American judicial system.
Yeah. I've seen the word scandal used to refer to this, and I'm not sure if it quite meets that definition for the reason you just mentioned, Tom, that, yeah, if it had been a hack or a leak or something like that, that would be scandalous, especially if like a Celsius employee had leaked it or something. But that's not what happened here. It's just part of a routine bankruptcy proceeding, and it just so happens that everyone's names get released as part of it. So yeah, I for one, like, I'm kind of with you, Tom. I didn't worry too much about it. I only had a Celsius account to basically play with it and see what the fuss was about. So I didn't have much money to get frozen. But yeah, when I signed up for that, I knew that I was giving over my information to a third party, and when you do that, you basically just have to assume the government already has it, right? Like it's out of your hands at that point. Are there any other strong feelings in the room about this? I think I am maybe the only former Celsius customer here. All right, cool. Well, let's move on to something more interesting then. Just important to note that happened, and a reminder that, yeah, when you deal with centralized entities, things like this can happen. So always bear that in mind. Moving on, we've talked a lot about U.S. regulations the last couple of weeks because, frankly, there have been quite a few of them. But this week we're going to talk a little bit about European regulations. So I think, Tim, you were speaking a little bit about this morning, somewhat passionately about how important these new MiCA, excuse me, this new framework. Sorry, excuse me. I know you had some feelings about these new regulations. Tell us what's going on. What is the status of these new rules? When can we expect them to go into effect? What, and more importantly, what is the implications? What are they going to institute?
Yeah, absolutely. So, yeah, just be careful if I miss anything. But I'm going to try and cover everything as concisely as possible. Get all.
I was pulling up our article just to. That's why I was stumbling, because I want to be able to check this stuff.
Cool. So yeah, so it's the Market in Crypto Assets, I believe it's called, framework. It's been developed in the EU Parliament since around June, I believe. I don't know the precise time. Anyhow, it's like a really big comprehensive framework that's designed to, put down some ground rules for crypto, basically, in EU member states. There's a lot to it. It's really long. It's been, gone through many different drafts. Some parts have been quite controversial and have been taken out. Others been put back in. So from the top, I'm going to start with things that haven't been covered, because I think that's a good place to know what things are safe for the time being from regulation, and that's DeFi. So like any kind of like stuff that's completely on chain, this bill or framework is not going to deal with them. That's going to come later on. The same goes for sort of lending protocols, airdrops, staking. if you're concerned about any of those things being hit by regulation in the EU, you don't need to worry for this framework. Another thing that has been mentioned a fair bit, but also is not going to be implicated here, is a potential proof of work ban. There have been some pretty strong comments from EU officials regarding this, but there's nothing in there about any potential proof of work ban. But there is scope for potentially adding in some additional rules in the future, and there are a couple of reporting rules for companies that I think buy proof of work assets. And another thing that isn't covered is NFTs. So, it's a very complicated subject. What exactly are NFTs? Are they this? Are they that? Are they securities? This bill isn't going to deal with that. But if anyone does fractionalize an NFT, strangely enough, then the bill does have something to say about that. Like a fractionalized NFT would be implicated in some part of the bill. Haven't gotten time to read that yet, but something I've picked up on. So moving on to the things that are included, there's sort of two main areas of regulation here, and that's stable coins and anti-money laundering provisions. So for stable coins, I think the biggest thing to take away from the MiCA framework is that they're going to institute $200 million or euro daily trading cap on, it must be dollars, on non-euro stable coins. So think USDC, USDT. If you're a company dealing, in crypto, you're not going to be able to trade more than 200 million of those in like a 24-hour session. So this is likely going to significantly restrict like the use of dollar-denominated stable coins within EU member states. And it's likely that because of this, there's going to be like a switch to euro peg stable coins. They're going to start getting more adoption and use, especially in Europe. And that will likely happen, in the lead up to when these regulations come into effect, which I'll cover at the end. So that's the stablecoin part. On the other part, anti-money laundering requirements. So this is going to require all crypto asset service providers. That's like a term that's used a lot in the framework. They're going to have to report all transactions of crypto between exchange wallets. For example, if you're sending some Bitcoin from Binance to Kraken, that's going to have to be reported by the exchanges, and they're going to have to keep records of that. And they're also going to be having to keep records of any transfers to self-custodied wallets. So if I want to withdraw some Ethereum, put it on my my MetaMask or whatever, that's going to have to be recorded by the exchange too, and it's going to be done. That's needed to comply with the Financial Action Task Force travel rule, which again, it's going to take too long to explain in and of itself, but it's basically an anti-money laundering provision that makes sure all transactions over certain amounts are reported. And this is commonplace amongst international banks, and it's just going to be sort of implemented with crypto exchanges too here. So those are the main points. Anything that is not being covered in this bill, there are currently reports in sort of the European regulatory system that have been requested. So I think in 2023, we can expect sort of reports on DeFi, NFTs, and also a European central bank digital currency. And so it's likely that once those reports are released, then specific legislation will be drafted that will target certain things in DeFi and NFTs. And then the final part, when can we expect these rules to go into effect if this bill does pass in the European Parliament on Monday, which by all accounts it will. I think it's the third quarter of 2024. Different parts of it are going to be implemented in different stages, but everything that the framework covers will come into effect by around that time. Okay, I think I'm done. If you get anything,
Awesome. That was a great rundown. Thanks, Tim. So my thoughts on this, I guess, are, this feels like a pretty positive development. And if anyone feels contrary to that, please let me know. It feels quite refreshing after some of the more draconian moves taken by U.S. regulators over the last month or so, particularly in the last couple of weeks. So, how do we feel about this? Is this cause for celebration? Is this do we see this as? I guess another question is, what do you think the motivation behind this is? It seems like perhaps the EU is trying to draw talent, or at least not chase it off. What are you guys' feelings about this? What do you think the reasoning is behind so many omissions, as opposed to what they did choose to focus on? Tim, I hate to pick on you, but since you...
Tom's just unmuted himself. I think he might be trying to say something.
Did he? I didn't see Tom.
Yeah, I don't know much. All I know is pretty much of a rundown that Tim gave us. But my first question is like, it seems to me this will be quite impactful for Tifa, right? Like, Tifa's going to have to either move out of the EU or change their business model, since they offer like a US dollar backed stablecoin. And the other thing is like it's like this focus on the euro stablecoin stuff is like I don't know if I'd celebrate that, because like it is good for like the euro is not strong at the moment. It is good that a lot of people have access to assets backed by US dollars ready at hand. Obviously, there's no like measures that are put in place at the moment to restrict capital flights. But in a scenario in which maybe actually, you know what? Like, I'm not sure about this, but I'm just saying in a scenario in which like there's a lot of like Europe goes through like keeps going through significant inflation. I think people would be happy to be able to like fly back to the dollar quite easily. And it sounds like this bill is going to restrict that movement, like, or restrict that capacity for some crypto users, anyways. But now that I think of it, like, you could probably do that on chain anyways without going through those centralized exchanges. So I'm not quite sure.
You raised some interesting points there with Tether, and also just with the difference between USD and Euro stable coins more generally. So I guess for the average person, yeah, it's not going to impact you. This is more for huge businesses like crypto exchanges that are potentially wanting to move around more than $200 million of wealth, or but yeah, more specifically on the point of issuers, I thought that was a more interesting point. Is like Tether already has like a euro pegged stablecoin, I believe. Maybe it's Circle. Anyhow, yeah, I think that we'll see a lot more use there. And also, it's not like there's a ban on dollar denominated stable coins, but those people, or companies I should say, who are issuing them will have to have them like residence or presence in the European Union as well, which is something I forgot to add earlier. And they're also going to need to prove that their reserves are protected, which is another thing that I managed to overlook when I was first explaining this. And this, I think, has been a really big point of a talking point both in the US and the EU. At the moment, we've got regulation going through the US House, where they're looking to put some, like requirements on companies offering these fiat-backed stable coins to make sure that they have adequate reserves in the case of a bank run. So I think that that's something that, it seems like it's going to be a parallel across regulation in different jurisdictions. But yeah, it'd be interesting to see how it impacts Tether for sure.
Thanks, Tim. Any last thoughts before we move into our last topic of the day? In that case, Oh dear, we've lost Nathan. I was going to move into talking about markets, but we've lost Nathan. Oh goodness. Okay, well, let's talk about markets anyway, and at least I guess discuss it to the best of our ability. So. Oh goodness, I don't know how to even kick this off, or even we should even talk about it. But it is kind of an elephant in the room, so it is.
Can I take it over?
Yeah, go ahead, Nimesh.
Yeah. So I think it was all about like the jobs report today that
Yeah.
Nathan wrote about in his Pro BTC, and I think we are seeing the negative effects of that. So good news is bad news for risk assets, but I don't know what Nathan feels, but I I see a lot of strength in the price action, as in stocks have revisited like lows and they have gone below them. Like they did go below them last week. We saw a bit of a revival this week in the S&P 500 and Nasdaq index, but in the last 2 days we have had, I think, Fed spokesperson Neil Kashkari talking about more rate hikes, and today we have had a very strong jobs growth number. So that means that uh, I think there was a consensus between on Fed now, which gives it like a poll on Fed now, sorry, which gives it a 92% like I guess chance of having another 75 basis point hike in November. So it places us uh, in a sort of a precarious position because it's still a risk asset, and there is and if you see like the trading volumes have not been too encouraging in the last few weeks. There's like for hours we would see the price not change for like even $100. So I see a lot less speculation now. Um, but yeah, like I said before, like Bitcoin has held like still held around 20,000, and Ethereum is looking strong as well. So there is a chance that we might, like move like oppositely to the market. And let me just check the DXY index. Uh, Yeah, so the dollar is rising again. Yeah, as obvious. So yeah, it's like there is a lot of negative news, but the fact that we have not made new lows, we have still held support at 19,000, and on chain is also not too depressing. We have had mid-tier whales buy for some time. Miners have stopped selling. At least that's what I can say. So it looks positive for the next few weeks, but yeah, I still don't think the bottom is in. Maybe this quarter or the next, and it might come from a macroeconomic shock, or it might be something like Credit Suisse uh, finally falling because they have like an update. They have to give a public update on October 27th about whatever's been happening with the bank. So if all Russia is always a wild card in these equations. So yeah, a number of things can happen for the next couple of months, but just looking at the price action and how Bitcoin and Ethereum has performed in the past 2 weeks, I think we might have a room for breather for some time.
Awesome. Thanks, Nimesh, for stepping in there. Yeah, there was kind of a surprising resilience this week that didn't go unnoticed. And well, I guess I'll open it up to the room. Do you guys share Nivesh's optimism about the next few weeks?
Yes.
Yes. Excellent.
So a few things I've noticed, like you said, there's been some surprising strength in the market, but also like there's not really much momentum to the upside. So we're getting trapped in this sort of increasingly narrow trading range. But the dollar doesn't look that great. It looks a lot like it's peaked. And today, I mean, just a couple of hours ago, I was looking at the chart. There was a large like red candle going down. So it looks like there's not much interest above like 112.50 around about there. Again, I'm no expert, but it's just what it seems to me. I've seen some people on Twitter who also have pointed this out. And another thing as well is like how, like you said, the strength last week, while the S&P sort of made new lows, while crypto sort of remained, about where it was. It just marks like a deviation away from basically the entire year where we've had the S&P and Nasdaq trading in line with Bitcoin, or at least Bitcoin following them, I should say. And now, as Nathan said, and I think you can probably talk about it more in his email today, is there's a correlation between Bitcoin and gold that's starting to form. So that's something to keep watching in the coming weeks, I think.
Thanks, Tim. And Nathan, glad you're back. Good to have you. Following along those lines, or what Tim mentioned, this correlation between Bitcoin and gold. Can you tell us? That's interesting. Is there any more you can tell us about that?
Yeah, I think, to be honest with you, two reasons why I think it occurred. Firstly, I think there's the potentiality for that the dollar index has topped, and if the dollar index has topped, then it makes sense that things that are negatively correlated to the dollar, like gold and Bitcoin, would both start to move higher in tandem. If the market thinks they're topped, then that would kind of allude to the fact that they both bottomed. And I think the other thing is the confidence in the overall financial situation with Credit Suisse. Although, I think the rumours started on Friday, and at the same time both started to move higher. But I guess the only thing that would worry me about that trend would be that the fact that obviously gold is a non-yielding asset. The non-farm payrolls job report today, the unemployment rate dropped, so that would kind of signal that the Fed have still got further room for more aggressive rate hikes, and they get close to, I think, the Fed's dot plot target, which was, I think, just under 5%. So assuming it's like that, we could probably get there quicker than what the market expects. So you've got obviously you've got on yield, you've got higher rates in the US. So that's not a particular positive goal by any means. But I think the key thing to probably watch would be the stresses in the financial system, and anything to do with Credit Suisse is probably going to benefit gold certainly, and obviously Bitcoin probably to a somewhat lesser degree, now, because obviously gold's more established. But those would be the two primary reasons in my mind.
Awesome. Thanks, Nathan. And while we're on the subject, this is something I think a lot of people have been wondering about. You brought up Credit Suisse a couple of times. This was big news very early this week, and it seemed to sort of, I guess, quietly exit the news cycles, at least the mainstream ones, as the week went on. Can you unpack just a little bit of what is the worry going on at Credit Suisse? Why people are looking to it? Because I'm hearing pretty severe things about defaults and possible bankruptcies. Is it really that bad?
Yeah, I think it's a blowout in the credit default swaps. I think the CEO's come out and said about the capitalization of the bank. They're looking for investors, which is probably not a great sign. I think it's to do with the overall. I should think what they're positioning in the market is at the moment in terms of these credit default swaps, and also I think we don't know. I think until we see the company earnings, we don't know the full state of the balance sheet as well. So there's probably people in the know. They know things that we don't. So I think just those overall concerns, and I think this is a rumor that's been going around for a while, but it seems to have got a lot worse on Friday. But I think it's a developing story, and probably more details are going to emerge. But similar rumors of Deutsche Bank, and nothing ever nothing ever happened. So you know, these rumors do come from time to time. You know.
Thanks, Nathan. It's good to remember that rumors are just that, just rumors. Yeah, in the last few minutes
Not
we have
necessarily,
here.
Jacob.
What do you?
There were, people were warned of terrorist collapse before it happened, and everyone sort of ignored them until it was too late. So
That's fair. I guess I didn't.
I'm not saying that they're going to have a bank run like Terra did, but yeah.
All right, that's a fair point.
Cautiously optimistic, I'd say.
I'll refine my adage about rumors then to take that into consideration. Cool. We've got about just a few minutes left. Any other thoughts on markets or maybe broad narratives going into the winter? What are you guys going to be looking for in the coming months? Now that we're post-merge, we're looking for a way forward, I guess. Yeah, Tom?
I think it'll be interesting to see if the Fed changes its stance after the midterms. And as always, seeing how the energy crisis resolves or doesn't. I think Nivesh kind of touched on it, but Bitcoin's hash rate is making new highs, and if it was just up to crypto and everything like that, this would be a pretty important indicator because in previous cycles, not always, but a lot of the time, Bitcoin's hash rate bottomed at around the same time as price did. So if the hash rate truly did bottom and we're about to keep making new highs and everything like that, just historical data could mean that Bitcoin's ready to move higher. That being said, that's just historical data, and maybe it won't happen this way this time.
Sure. Yeah, I think I don't know. This week I'm feeling some positivity, and maybe that's going to extend. Yes, Nivesh.
Yeah, sorry to interrupt, but yeah, just one correction. I just checked the chart again, and miners have actually sold heavily today. So it might be a negative sign, a yellow sign definitely. So something to look out for. But yeah, the price action is still not too bad. So let's see how it holds up during the weekend.
All right, cool. Any last thoughts before we wrap up, guys? All right, we'll take that little positive note into the weekend with us. Thank you all for joining us. It's been a pleasure as always. Thanks to everybody on the team for taking part in the discussion. Wishing you all a great weekend. Take care and see you all next week.